We're here to talk about the state of the economy and in conversation with the Chief Economic Advisor. So thanks for taking your time out and speaking to us at ET Now. Let me first begin by talking about the slew of GDP downgrades that have come in for the economy, from World Bank to IMF to OECD, ADB. Everybody's been talking about how there are a whole lot of vulnerabilities for the Indian economy going forward. In that context, does the 7% estimate that was there for this year in your economic survey seem a little too optimistic?
So I must mention that at the time when we had made the assessment, compared to that, there has been some slowdown. I think we do recognize that, and the revised projections reflect some of the aspects that are on the short run. I think that is something that I must emphasize, that in terms of the long run outlook, the fundamentals remain sound. There are some short-term aspects, as we had also pointed out in the economic survey, and which is important to understand, that the economy really depends on the virtuous cycle, starting from investment, going to productivity, then to exports and jobs, and thereby to consumption, which in turn then affects investment. And it also pointed out that the investment rate had fallen from the high of about 40% in around 2008-2009 to about 28%. It's of course bottomed out and started going up. We also recognize that the effects of many of these things are felt with a lag, and that's why the government has been very sensitive and has cut the corporate tax rate so that investment could be spurred. We must recognize, of course, that the investment impact of that will actually be felt with some lag. It's also important to understand that we, and I've said this before, that the fall in the investment rates themselves were because of the concerns on the balance sheet sides, and when it took 6 to 8 years for some of that aspects to build up, the winding down also takes time. To added to that, some of the concerns on the NBFC liquidity part, which is liquidity is mostly, it's a short term aspect, have combined to actually lower some of the little bit the projections. I think the steps that have been announced, especially on the first loss guarantee to tide over the liquidity issues that the NBFCs and which the Honorable FM also discussed it with the banks on Monday. For the MSMEs, the 40,000 crores that the MSMEs actually expect in receivables, using those receivables to actually to be able to take credit, working capital credit. I think those are steps that will help in easing some of these liquidity aspects. So we do want to highlight that the IMF, while it lowered its projections for this year, continued to say that from next year it will be 7%, which actually goes back to the point that I'm saying, that there are some short-term sentimental, but long run the fundamentals remain.
Since you're saying that there will be a short-term blip, does that mean that we will perhaps grow a little lesser than your own projections?
That may be possible, and I would though wind back to what I was saying in terms of the virtuous cycle and the investment rate. The aspects that we saw on the NBFC side have been something that have added to. We had factored the lowering of the investment rate, but these aspects have actually somewhat.
So most global agencies have cut down and slashed down India's GDP forecast by as much as 80 to 90 basis points. Is that a fair assumption from your end? When you're saying a short-term blip, what exactly is it going to be?
These would be, I would say, there has been some downward revision. But I would continue to emphasize that in the long run, the fundamentals remain unchanged, and therefore we will be back to the growth rate that we deserve to be at in the near future.
Every time when we say that the worst is behind us in terms of the banking sector crisis, and then issues like, and cases like the PNB fraud case and the PMC crisis that's been, coming out, they hurt the sentiment. They, once again raise questions on the health of, the banking sector. When can we say that all these things will be put behind us? You have said that, these things took a long time, so the winding down effect will also take that much more longer. But when can we say that, okay, now, we can start from a clean slate?
I think we have to make, be careful in understanding the distinctions, in the question that you've framed.
I know
the urban cooperative banks have a different set of issues. Even for instance, some of the Nirav Modi episode, for instance, that happened. These are aspects that are, yes, they actually are related to overall, the banking operations. But when we've been talking about on NPAs primarily, it is on the lending practices, and there is, improvement in the process of lending. And I think especially the fact that commercial decisions are being allowed to for banks to decide by themselves. There is, as one would expect, and in fact we've seen in the data as well, banks have become more careful, and which is something which is expected. So my sense is that the NPA crisis, that we've gone through, has made us aware of some of the aspects that we need to be thinking, more deeply about, and which we are doing.
Since you're saying that you're thinking more deeply about what's brewing in the banking sector, which direction
I wouldn't say brewing. I would say actually, these are aspects that we need to think about, and aspects that we may need to tweak or fix.
Okay, but which direction should we move in? Because the IMF has also pointed out for the need of reform. So what exactly is it? Because the government has adequately capitalized the PSU banks as well. We're pushing the mergers for PSU banks. But where from here? Administrative reforms have been done. What more?
On the banks, I would actually, and this is something which, I have been advocating. World over, banks use a lot of technology to be able to make their lending decisions, very well. In my own work, on this in this area, I've seen how the predictive modeling can be very, very useful. So one key area where I expect that there could be substantial rewards from investing in is using a lot more technology, a combination of artificial intelligence, machine learning, etc., not only to screen borrowers but also to monitor them regularly. Because when you give a 5-year loan, the assessment of the credit, let's say at the start of the loan versus maybe 1 year or 2 years down the line, can change, and it's a dynamic scenario. So the way we've been able to implement so much of technology in many other areas, I think our public sector banks need to be really investing a lot more in technology to be able to screen borrowers, because the primary focus has to be on the larger borrowers, being able to actually assess them and monitor them well, which is something which I would say in this context the mergers actually would help, because investments in technology require a certain scale, the economies of scale, because technological investments benefit from economies of scale. So those would actually be a good, so this would be a good moment, opportune moment to be able to invest in cutting edge technology, which is what banks world over are doing, and which our public sector banks also need to be investing in, and that's something that we are working on.
This has been the festive season, and we at ET now have something called नई शुरुआत, नया साल, नई शुरुआत. At this point of time, you've been reviewing the banking sector very closely, and the banking sector they've also been giving out loans in a big way. Almost over 80,000 crores is what we heard from the government on that. But having said that, sir, the RBI in a report recently, they've said that credit growth is at a 2-year low. You have said that that there is some sort of the banks have been a little more careful. Is it the banks being careful, or is it the fact that there is low demand in the economy for loan takers?
So I think this is a point that we've analyzed very carefully. It's my own assessment that the demand for credit is still pretty okay. If you look at the the breakup in terms of the growth of credit among the private sector banks and the public sector banks, the growth of credit actually slowdown overall has not been as much in the private sector banks, and that actually, if it were a demand side issue, one would have seen that there should be a equally sort of sharp, let's say, change in both sets, but that doesn't seem to be the case. So as it happens world over, when as they say in Hindi, दूध का जला मट्ठा भी फूक फूक के पीता है. So, and that is a commercial decision. So there is some care that is being taken. It's I think our public sector banks are calibrating into it, and therefore there's some slowdown has happened in the credit, but I would attribute it not as much to demand side factors. Even when one looks at other data sets, which look at basically loan inquiries, etc., I think the demand for credit is pretty okay, which is basically cycles back to what I was saying earlier about the fundamentals. If for instance fundamentals had changed drastically, then demand would have been very, very low.
Are we sorely overdue for an asset quality review in the NBFC space?
So I would mention that the credit guarantee scheme that the government and the Honorable Finance Minister had announced in the budget, as a financial economist and somebody who understands securitization and these kind of guarantees very well, it's a very good move, because what it does is by really, so suppose you actually have a 100 rupee portfolio, and the first 10 rupees is first 10% is basically guaranteed by the government, then the rest of the 90 becomes much less risky, and these kind of schemes are primarily used to tide over some of the liquidity aspects. On Monday, the Honorable Finance Minister had actually taken looked at and taken an assessment of this as well, and there have been clarifications, whatever that were necessary, that have been given. Moreover, while the earlier the threshold was kept at AA, it's been sort of expanded to investment grade, which will bring in more assets into the portfolio, and thereby enable the liquidity aspects, and for the liquidity aspects to not get converted into further solvency aspects. So I would emphasize on this aspect. Secondly, some of the current situation is also because of the working capital that MSMEs, so for instance, they are sitting on 40,000 crores of receivables that they can get, and here the as I had mentioned, the scheme of discounting these bills and thereby giving working capital credit can really help in the and I also must point out, actually, I was looking at some data on the passenger vehicles, etc. I think we have to be very careful now to make sure that narratives that are not based on careful data are not are not given as much traction as they sometimes.
There's been a lot of talk, at least in the last couple of days, around how economy was about 6 years ago and where things are now, when the financial crisis was brewing. But moving away from that, I'm going to ask you on the private sector investment, because that is still not flowing in, because even after the corporate tax cut, it is going to have a lagged effect. Does that mean that the government will have to shoulder growth given the lack of private investment? And will it be, or will it be guided by fiscal prudence?
So the government, as it has already outlined several steps, including the corporate tax cut itself, which clearly signals the intent of the government to do whatever it takes to put growth back at on the high 7% plus reaching 8%. So I think the commitment from the government on this side is unwavering, and will continue to support growth.
You'll continue to support growth. So does that mean growth takes precedence over fiscal prudence?
So these kind of macroeconomic aspects are typically a careful balancing act, and we are deliberating very carefully on it. There is emphasis on disinvestment and on asset sales as well, to be able to, together with the the extraordinary dividend that has come through, there is some rationalization of expenditure that can also be done, to be able to ensure that we actually do what is right for the economy.
When you're saying rationalization of expenditure, are we talking about expenditure cuts coming in for the economy?
No, I would not. So these are actually, I would be I would point out that this is about revenue expenditure. That the government is absolutely clear that capital expenditure is really critical, and that is something that will be continue to be emphasized by the government.
Since I mean, I know you've told me to not ask you anything about RBI, but I'm still going to sneak in one question. Many say that we're at the end of the cycle for the monetary tools, the monetary side of things for the economy. Does that mean that fiscal push is the need of the hour?
So as I've already said, I think the government has signaled the intent on doing what is necessary on the fiscal side as well as on the structural reform side, to be able to bring growth back on its path. The government and the central bank are working together to do whatever is necessary to for this.
I'm also going to ask you, under the FRBM Act, there is a 50 basis point window that we have. Given the fact that there are specific conditions for it. Also, but this has been an exceptional year, given how
the conditions actually that are laid out there are very, very clear. So one has to actually the conditionalities in the FRBM Act is for a situation that is much into I have to check the details, but if I remember right, two quarters of decline, decline, not necessarily this is a slowdown. There's a big difference between the two, so we have to be careful. I think it's important to highlight that there is a difference between a slowdown and what is called, let's say, a crisis or a recession. A recession is defined as one where for 2 quarters there is a decline in GDP, in other words a negative growth rate. I think we have to be have to acknowledge that there has been a slowdown in growth, but
this is no recession.
It is not. It is not. I think the narrative needs to be balanced. I've said that always. That we should not get onto irrational exuberance when things are going good, and get into excessive pessimism either. We still are growing at we will grow at 6% plus, and in some sense I would say this is actually a good opportunity for us to also look at what are the aspects that we need to really think carefully about and address.
The government has also set up a panel to look at augmenting the GST revenues. The revenue itself, while a lot of steps will be taken to get the money going on the strategic stakes side, but the revenue seems to be a concern. What's your own estimate so far? We're halfway through this fiscal year. What are we staring at a shortfall in terms of revenue? Because the growth rate has only been at about 5 to 6% in direct taxes
so I think
and GST.
Recognizing this, the government has set up the committee to be able to look into all aspects of of the GST. I think there is no denying the fact that the GST was an important piece of reform, and again, based on my own and have looked at such reforms in several countries. Reforms like these, even our own experience with basically Senvat, and it takes time for some of those issues to be brought into onto the surface, and then for us to respond and fix, and which is what the government actually is intending to do by setting up this committee. So I'm pretty sure it's actually a set of wise people who will come up and give us suggestions that we should be able to take action on.
But are we staring at a revenue shortfall for this year?
I think that's something which we actually would have to wait for the for the numbers to come in, and I'm pretty sure the Revenue Secretary is doing those calculations.
Let me also ask you, since the government has undertaken a lot of reforms, especially on the corporate tax rate cut, they took, they really shifted in that sense from the normal tradition of announcing tax cuts only, it used to happen during the budget time, and this time we saw in the middle of the year. Can we also hear something from the government? Diwali is just around the corner on personal income tax as well.
So the committee, that was a task force that was set up on on relooking the direct tax code, of which I had the privilege of being a member as well, has submitted its report, and the government is considering the report. So as and when the report would actually be assimilated fully, the government will take the necessary steps.
I'm going to rephrase the question and ask you if corporates deserve a tax break, and that too that huge one. Do you think middle class too deserves something, and that is going to spur demand in a huge way?
So as I was mentioning, and in the economic survey, what we pointed out was, in an economy like ours, investment is the key driver, and the investment benefits the middle class as well by creating jobs, by creating by creating well-paying jobs and enhancing exports, which then again create jobs for but we have to recognize that the investment effect of that is actually felt with some lag, but actually is a more sustained effect. Consumption, on the other hand, you can perk it up for a short while, but it'll something that'll peter out. And what we pointed out very clear, again I will emphasize that there's a difference between what is the key driver and what's the force multiplier. At the macroeconomic level, and this is something which we must understand, every variable seems like both a cause and an effect, and that's why scholarly work has to actually look at this very carefully and point out what is the key driver, so that we fire on the key cylinder, and which is investment. And that's the corporate tax rate cut has to be seen in that light. I would urge that the steps that have been taken here to sort of reduce the corporate tax rate cut and thereby spur investment. We're now in among our neighbors, I think really competitive,
yeah.
And it will show its impact on investment. That's there is no question about it, because and investment will have, if we really need to sort of keep our long run vision to achieve the $5 trillion economy goal, we have to have sort of have the patience to say, let this effect actually go through. Investment is really critical, because that's what starts the cycle, and that's what we've taken the steps that are necessary.
Sir, I know you have to go for a meeting, and this is going to be my last question. The markets are expecting some movement on LTCG and STT once again. It's also been a part of the panel that you've been a part of.
We're not yet in budget time, actually. That's what you're asking.
So can we say that all the hopes are dashed on that front for the capital markets?
That was just an off-the-cuff remark. As I had said, that the committee on the direct tax code has considered all these issues together and has made certain recommendations. It's a committee of very wise people who actually had I had the privilege of interacting with. So these have been considered, and I think it will be right for us.
But how important will it be to restore the confidence of the capital markets?
Overall, as I've said, that we must recognize that there is sentiment is a short-term thing. It's not something which is a long run. The government recognizes the need for doing what it takes on the economy, and is certainly, as you would have seen, the number of deliberations and interactions that have been held. This is a government that is listening to, and also I must also point out actually that through the economic survey we've actually set out a very clear path for what we should be doing, and if we basically stick to that, the results will come.
So the door to more reforms is not closed?
No, I would in fact say that the reforms actually are structural reforms. I think the recognition is very clear that we need to be doing more of that. So I would put it positively and say that we are actually committed to structural reforms in the economy.
All right, on that positive note, so thanks for taking your time out and speaking to us at ET Now.
My pleasure.